Patrick, welcome to the show. For somebody who doesn't know who you are, what you do, how do you help people? Who is Patrick?
Well, thanks for having me. I'm Patrick Pychynski, founder of Stacking Capital. We help business owners and investors unlock business funding, especially 0% interest business credit, through a structured strategy that focuses on three things: optimizing the personal credit, making the business lender compliant, and applying in the right sequence so that approvals are repeatable. The big difference is that we're not transactional. Everything that we do here is for the long term. We don't just blast applications and then disappear. We first build a bankable path so that the first round of funding is just the beginning, not the end.
And what are we going to cover today?
Yeah, well, basically everything that a smart buyer would want to know before becoming an actual client, like how it works, what it costs, who it's for, what the risks are, and how to protect yourself through this funding process, what the results look like, and how you're handled as a client here. So if you're skeptical, this is exactly for you.
Okay. And before we get into it, I got to ask you, why did you get into this process, this industry? What got you excited and motivated to start Stacking Capital in the first place?
That's a great question. I was going through this myself about 5 years ago, and I was getting completely screwed over through either just buying a bunch of information that led nowhere, still left me confused.
Okay.
I still remember buying, it's still out there too, an $8,000 course on credit stacking. Wow. And both myself and others in that group were lost and confused and didn't know what to do next, right? So that was a big one. And then I actually went through a funding company, like one of these transactional companies I tell everybody to avoid.
Okay.
And it was horrible because they ended up actually delaying the business funding round that I could have gotten a lot sooner because they added a bunch of new personal trade line, a bunch of new accounts to my personal credit profile. So they did it in reverse. And the reason they did that was because they were chasing a back end fee. So they went for easy approvals, accounts that, again, personal credit accounts or business credit cards that report on personal, or just business credit cards with very low limits. And that's exactly what happened to me. They had added 5 new personal accounts to the personal, and I think they only got me one business credit card with like a $4,000 limit.
So it was just hurting you from the start. What business were you trying to start at that time?
I was doing marketing. So in a sense, I've always done some form of consulting, but I was mainly on the marketing side of things.
And this is after you spent time in the military, right?
Yes, way after.
How long were you in the military for?
About 6 years altogether.
6 years.
Right after high school.
Wow. Okay. So then compared to like 2026, right, and where we are today versus 5 or 6 years ago, what have you seen in the industry that's kind of changed the way people do this business? Do you think it's more sophisticated or it's still kind of like a Wild West?
Well, in terms of how people do business, in terms of other funding companies, it's still the Wild West out here. It's mainly comprised of like marketing companies and also these big funding brokerages where you're just a number. They want to kind of, again, you're just a number in their process. They're going to put you through some cookie cutter template sequence and pretty much collect their back end fee. A lot of times that ends up sabotaging your future growth and what we like to say is making you bankable, right? So they're just thinking, it's the way I look at it is most funders are really just giving you a Band-Aid solution, but there's no plan or strategy for when that 0% runs out. You still maybe have balances on those cards and don't know where to go from there. And the reason why we're different is because from the first round, as soon as we're done with your first round of funding, we're removing the inquiries and getting you ready for your next round. That way we always have some form of available credit line to maneuver, pay down that credit, recycle the 0%, and keep on trucking.
Wow. Okay. So you're talking about a long-term plan here for each client. So it can't be this cookie cutter approach where hundreds of applicants are coming in every day. This is more specialized because to have that level of detail with each person means a lot, right?
Yeah, 100%. So it's a 6-month-long program. It is one-to-one. They have one dedicated person throughout their whole funding journey.
Wow.
All of the important milestones are done on Zoom, from the onboarding to the actual strategy calls to the actual application calls. We want to leave no room for error, which is another problem with a lot of these funding companies. They are doing it for you, which means they're just applying for you online. And that could become a problem if, let's say, you're in Florida and they're in Texas. Now
Wow.
Yeah, now we're just adding variables to this equation that shouldn't really be there that could slow down, delay, or really lead to denials. Not to mention, it's kind of illegal, and it'll leave you completely in the dark as to what's going into those applications.
So what prevents somebody, or not prevents, I'm sure that they could do it themselves. Maybe they'll say, oh, well, I don't really need you guys because I can use ChatGPT or some type of Google or AI, or just try it themselves. I've heard from our clients that they still struggle to get this, and they have to have us step in, and sometimes we send people to you, which is why we're doing this interview in the first place, right?
Exactly.
Because you guys are so good at it. Where do you think the average business owner who's trying to do this themselves gets stuck, and why is your service so good at getting people what they want quickly?
Yeah, so it's hard to encompass everybody, but in general, it's in our name, Stacking Capital. From the very beginning, it's all about strategy. For example, I got off the phone today with somebody who just couldn't see it, right? And we were talking about a long-term strategy and what can happen here in the next 30 days. And he's talking about like, oh yeah, but I could do that myself. I can apply for a credit card, or I can apply for a loan. And it's like, you absolutely can. You don't need us for that, right? But if we're looking to stack as much capital as possible within a short time frame and make sure that we can continue to repeat the 0% interest process for the next 1 to 2 years, while we're also setting you up for long-term bankable financing. And all that means is that everything we're doing here in terms of optimizing the credit, building your banking relationships, getting 0% interest credit cards, if we do it right, this is going to warm up that relationship with that bank to later come back and go for their long-term financing options with 5-10-year repayment terms. And a good example of that is actually, for example, Frank. We're just finishing up on his second round. We're coming up on a year of working with him, and we've gotten him close to $1 million. On that second round, it was around $400,000. Only about $110,000, give or take, was 0% interest. The rest was a $350,000 SBA loan. So we have some of that 0% expiring from the first round, which we can now refinance into a much longer term product with the SBA.
So you guys are also doing the refinance for all these people and helping them continuously get more and more capital at low rates. And you're saying 0%. Is that like a marketing gimmick thing, or is that actually what they're getting when they come to your door?
Great question. Yeah, so the 0% comes in the form of 0% interest credit cards.
Wow, okay.
And this is a promo period that the banks are doing to get your business.
Right.
They're hedging on you basically running it past that promo period and paying interest. But again, if done right, we can actually recycle the 0% from the very same banks to have 1 to 2 years of 0% interest leeway there.
And why are they willing to do that? Like, why are they willing to take such a long-term approach on somebody who probably doesn't have the best credit score, or somebody who is applying to? Because I know, like, when you apply for even like a residential mortgage, they see one inquiry, and they're going to ask you about it from 6 months ago. How does the when I apply for like a residential mortgage, right? Like, it'll take, let's say 2 to 3 months to get approved. They're going to look at the past 6 months. They're going to say, hey, why is there an inquiry on this? What happened here? Were you shopping for mortgages and whatever? But here you're able to rapidly get the right type of funding for the client without hurting their credit score, without raising any red flags with the bankers. How does that work?
Yeah, and it goes back to answering your question too of like, why cannot somebody can do it themselves, right? Potentially, and do it. The way we're able to collapse timelines, get the most amount of funding that file can receive, is because there's a few things that we can do leading up to those applications, and we do it all at once. So by week 1, we literally have your onboarding call and your strategy call knocked out, where you're walking away with bank appointments and an exact strategy as to what we need to do to get the funding. So there are things like optimizing your personal credit, and that might mean like removing inquiries that are not attached to an open account, maybe paying down some balances on some cards. There is a saying called ASIO, all zero except one, which means all of your revolving cards are at zero balance except for one. And that's what a lot of high score achievers do. And it's not saying that's where you have to be exactly, but the closer we can get to that spectrum, the better. It all boils down to behaviors and packaging up your file the best that we can be. And that's with optimizing your personal credit, business compliance, and your banking relationships. So like I told you, with the optimization, it's all about maybe getting some credit limit increases, removing inquiries, making sure that your profile does not look like it's credit hungry. With business compliance, that's everything like your name, address, and phone number and how it shows up across the bureaus. So even just having a high-risk name can lead to denial straight up across all of the banks. Having a wrong industry code or an inconsistent name or address or phone number across the bureaus and directories can lead to a denial even with an 800 credit score. And then your banking relationships is something that, again, if oftentimes, if you have a good credit score, you haven't opened up too many new accounts, and you already have maybe relationships in the form of a checking account or a credit card with a tier 1 bank like Chase, Bank of America, or Amex, oftentimes we can leverage the relationship you have with them, leverage our relationship we have with our bankers, and plug you into our system for some very quick wins. So some people might be ready to go for applications right away, while about 70% of our clients might need that sort of 30-day ramp-up time to go for a round of 0% funding. In the meantime, day one, we run a scan on their business. So that pre-qualifies them across 20 different programs. So there are other things like, for example, business lines of credit, term loans, revenue-based lines of credit, personal loans, that will fund quicker a lot of times than the actual 0% business funding that we could look into immediately as soon as they come in.
So it's not just a credit card program, it's also the more, I don't want to say sophisticated, but not as quick turnaround time applications like you just said, revenue-based financing.
Those are quick.
Those are quick.
Yeah, those are usually really quick. So
Okay.
So somebody, let's say, decides they want to come on board. They have like a 750 plus credit score, but maybe they're not optimized in terms of like banking relationships. Maybe their profile isn't made up of tier 1 banks. Maybe they have like a Capital One, a Discover, and some store cards and stuff like that. We might need the time to build a relationship with those banks, optimize your personal credit, make sure your business is compliant leading up to those applications to ensure that we're actually getting a significant amount of business funding. So while that's in the process, we can look at other things that might come in quicker. And I'll give you another example. We had a client he wasn't even looking for much. He was looking for about $15,000 to buy a dump truck. Mm-hmm. And he was probably a good 45 days away from getting 0% funding. So I told him, I'm like, look, for that type of investment that you're looking to make a vehicle, an unsecured personal loan at a 5% interest rate with a 5 to 7 year term might sound pretty good. It makes sense for what you're trying to buy, which is like equipment, a truck. We literally got him that on week 1 because with personal loans, we could get pre-approvals and rates right there and then, and they'll fund within a few days. So we were able to get him the money he needed to acquire that truck, have him start making money on the business side, and now he's happy, and now we can start building the business credit side the right way. Wait that 45 days to optimize that credit, wait for those things to update on his credit profile, expand his banking footprint, and make sure, cross the T's, dot the I's with all of the business compliance stuff.
So this is a very hands-on. How often are you and your team meeting with each client to make sure they're getting everything?
So all of the, and this is all laid out in the agreement, which is mostly laid out in simple English to let you know exactly what we're going to be delivering. But we're outcome-based here, right? So we actually have in writing a minimum guarantee of at least $100K in funding.
Wow.
Our 6 months don't start until we fire off your first round of applications because we understand somebody might need 30 days of prep time, or maybe we have people that come into our program that are 6 months away from funding. But if they're 6 months away from funding from us, that means they're at least 12 plus months away from funding anywhere else. That's without even taking into account the mistakes they might make along the way, either by themselves or with other funding companies.
Yeah, I mean, you're basically saving people time and money. And by time, it's not like a few weeks, it's literally months.
Oh my gosh. And then like your friend actually that you referred over.
Yeah.
Oh, like somebody like that, right? Like he's a foreigner, so his credit profile on the personal side is nearly non-existent.
Yeah.
But he's got an established business that's cash flowing $100,000+ a month. People with resources, like again, there's no reason to take the slow route when we could easily have a very thick profile reporting the next billing cycle. He's got $150,000 in liquid in a money market account. So I told him, I'm like, look, for a person like you, we could have two $20,000 credit cards reporting next billing cycle and $350,000 loans reporting on your credit.
That's
the
phenomenal.
rest is literally just letting it age and waiting for the right time to apply for the business credit cards.
And so you're going to actually reach out to him when it's time for each stage and keep him notified and posted like, hey,
absolutely,
you can keep growing. You can keep doing what you want to do. You can do more now because you're on track of their calendar as well.
Yep. Oh yeah, 100%. So he came on board. Before he came on board, we literally got alignment on the plan, right? Most people want, we get on the phone, they want funding tomorrow.
Yeah.
But I literally told him, I'm like, look, your profile is non-existent. We have to build it. The good news is you have the resources to do so. This is what you're looking at.
But I think like a mature business owner understands that things take at least 30 to 90 days, right? And if somebody needs money quickly, they're not really the type of person who's going to use it responsibly anyways, or they're not going to be a really good client. So in your opinion, who is a good client? Like who's a person that can come and just start working with you guys?
Somebody that, again, appreciates the strategic approach.
Okay.
Yeah, because you're right. Like you can lead a horse to the water, but you can't make him drink it.
Mm-hmm.
So at the end, like I can try my best to explain why we're different and why you want a strategic approach and why you don't just want a Band-Aid solution and just go with any funding company to get your funding round. Because again, if we don't start immediately preparing after your first round, you're already behind schedule. If you don't have a plan for what happens when that 0% expires after those 12 months, give or take, some cards are 6 months, some cards are 18 months, you're already behind schedule.
So who is like, who's a bad client? Quote unquote bad, like somebody that you would just say, sorry, we're not working together today, but maybe they can become a good client. Like who's a bad client, and then how do they become a good client?
Yeah, the bad clients are the ones that think they know it all, or the ones that think they have a 800 credit score, and because of that, the banks.
Wow.
Yeah, the ones that, I can sneeze and get $100,000 kind of thing, right?
Oh, wow. Okay.
It's mainly that, and I would say that our best clients are the ones that are highly qualified. They're very smart, so they'll do their due diligence, and we'll have very logical conversations around what we can do with them. But they understand that they don't have neither the time or the expertise, and they much rather pay somebody to take the fast lane, and most importantly, keep it as simple as possible for them.
And do it right.
Yes, absolutely.
So how do they become a good client? Let's say they are that person who has a perfect credit score, and they think that they're doing everything on their own and they can keep doing it that way, or they think that they can just call up their banker and the banker handles it. How do they kind of do that mental shift to become a good client?
Well, that's the thing, right? It might be beyond just credit stacking, and it might be just
therapy.
Yeah, exactly. Just people that there's a mindset out there, right, where it's like, I'm not going to pay you this much, or I'm not going to pay you up front, and they have all this already set in their head. Like when I pay a mortgage broker, or they already have this story in their head, right? So how do you become that? By basically trying something new, being open to something new, and realizing that we've all gotten ripped off, we've all gotten screwed over, but at some point, like especially, we don't go in with a pushy attitude or anything. Like the first call is literally all about alignment and having a very logical discussion around like, this is where you're at, this is what we can do for you, this is what you need to watch out for if you don't prepare and just go for a Band-Aid solution, and this is why I think we should be working together. That's the best I can do, and for the most part, like I said, that guy with, I was talking to him earlier, I was telling him like, this would be the way to go. Like we get you a personal loan, we do this, we do that. I was even, because this guy had been apparently previously burned by other funding companies and has worked with other companies, so he didn't want to do anything up front, but also didn't want to do a back-end percentage. So I was like, I'll work with you. We'll make the $7K, which will be a flat fee, contingent on your personal loan approval. And the guy was literally still saying like, oh yeah, but I can get a personal loan approval by myself. I had already explained to him everything about why we're different, the long-term approach, why, again, you can get approved for a personal loan. But the whole idea here is if we're looking to stack capital, once you start that sequence, we have to pretty much finish the rest. Everything has to have the right timing and application order to, again, ensure that we are getting approvals and not denials.
Yeah, but
I ended up hanging up on him.
No, I get it, but I also like the fact that you're saying like, hey, we're also just as invested as you, because the moment we go into this relationship, we care about our reputation so much, and we care about the results our clients get so much so that we know on our end a 6-month commitment is coming up, right? So whatever the fee is, part of that's going into investing into that client themselves. So it actually in the long term doesn't seem that expensive. I think it's actually kind of relatively cheap, especially with the way interest rates are going. So on average, let's say you're saying it's a 6-month commitment to, have that runway to get everything done appropriately. But like realistically, let's say you have a 700 credit score. How long would it take for somebody to get funded in your program? Let's say up to 100 grand.
So like, that's a tough question to answer because a 700 is just a score. It gets the question, it gets the conversation going. But for most people, again, if you have good comparable credit, so if you have at least a couple of cards that are above a $5,000 limit and they're at least 3 years old in history, we're usually able to get anywhere between $50,000 to $100,000 in the first 30 days. You know, obviously, if you're better than that, you know, if you have $10,000 credit cards reporting already and they're with good tier one banks, then we could be looking at 100K plus within those 30 days. But a lot of that's going to also depend on whether you've opened up a lot of new recent accounts that are reporting on your personal. This is why we want to do the business credit first, because we could remove the inquiries after we're done, if we do this right, and we're not going for business credit cards that report on personal.
Okay, so there's like recourse and non-recourse type of cards that you guys have access to as well. Cards where people don't have to personally guarantee.
Well, they are all going to be personally guaranteed.
Okay,
So that's a good question. That's a really great question, actually. I'm glad you brought that up because there's this whole other world on the credit side, and this is mainly targeted towards people with bad credit about the world of no PG, EIN only credit.
Okay, what's that?
Which in essence is corporate credit. And it's so that's what we're trying to get you to, which is becoming bankable, right? Becoming bankable entails building out the 4 legs of a table, which entail lender compliance, business credit, business trade lines, having 10 to 15 of those reporting, and then having your financials in order. So once a business has that built out, that's when they can start to secure no PG, non-personally guaranteed business credit. It's going to start off first in the form of like secured stuff like equipment, loans, vehicles. And once that business has about, you know, a couple million in reserves and a couple million in revenue, and you have all those 4 legs built out, that's when we're talking about now corporate credit and 0% cards being accessible with no personal guarantee. But that's a few steps up. And the sad thing is seeing a lot of people market this towards people with bad personal credit as a form of like skipping steps and unlocking this massive amount of credit. The only thing you're really going to end up with still a bad credit score and a good business credit score, and you still need revenue for this, is going to be some alternative financing in the 20, 30+% interest rates, potentially even 60+% interest rates, which with things they call a merchant cash advance, where they're not even allowed to call it an interest rate. It's more of a factor rate, where I've seen it as high as like 1.69 for a 6-month term. So you're looking at 69% interest on a 6-month term. That's not APR. So that's literally like 140% APR.
Yeah, you guys are very, very refined with how you do this. Like I've seen this for tons of clients, and I think it's just amazing the results that you guys are able to get. Let's say somebody said, you know what, I just don't want to, work with Stacking Capital, and they want to work with somebody else. How do they even think about the signs of saying like who's legit, who isn't legit? Because it is a niche industry. It isn't something that people are commonly doing. Most people have jobs, but we're seeing now unemployment go up. Side hustles people start getting rejected from bank loans because, banks are saying, okay, you're very risky right now. And, how do they go and find an expert or somebody they can trust? What are the signs, maybe some qualifications that they want to see in a funding company like that?
Yeah, great question. And I think to sum it up and to keep it short is just make sure that they're not just a credit stack. So if they're only doing credit stacking, they're more than likely just a marketing company. But then you have the brokers too. So the brokers will have their whole marketplace of alternative lending, and oftentimes they're charging you a back-end percentage fee on the credit stacking because a lot of times they're farming that out too. There's like these 2-3 big clearing houses, they call it, that pretty much fulfill for most of the industry in terms of the back-end stuff. So you either have one of those big shops doing it or some small guy that watched an outdated YouTube course or something and is doing some kind of cookie cutter template. So if you're considering somebody, make sure they're talking about becoming bankable. Make sure that they're talking about bank term, long-term financing, or what comes after at least the first round of 0%. And again, if you're not immediately preparing for your next round after you're done with the first round, you're already behind schedule.
Okay, so how would somebody get in touch with you and start working with you? What does the cost look like? Because I know I've been sending a ton of people over because you guys keep winning so much and delivering the outcomes that our clients want. So how much does it cost to work with you guys? Maybe that price will start to go up because of the amount of demand that's happening with your specific process and your workflow. What does that look like right now for somebody?
It definitely will start to increase, number one, because we're nowhere near the most expensive or the cheapest right now. And we are continuously investing into our product and our team. I mean, just if you go back, just a year and a half ago, it was just me by myself. Now we have like a team of 10 people. Not to mention we've invested heavily into software, very similar to what the banks have. We can run a scan on your business, look at your business credit scores, look to see what programs you pre-qualify for and where you're at with lender compliance. So right now, we're charging an upfront consulting fee of $7K.
But that's an investment. And realistically speaking, there's an ROI on that investment. And how should somebody think about the ROI of working with Stacking Capital compared to any of these other lenders?
Yeah, and that's a great question. To sum it up, like most funding companies are very transactional. So that's not what we're doing here, right? So we're 6-month-long advisory. And in short, what we're looking to do is strengthen your personal credit profile, make sure that we have 0% access to 0% interest funding for the next 1 to 2 years, that all of the banking relationships we're creating now not only lead to 0% for the next 1 to 2 years, but they're also opening the door to the long-term financing products they have as well.
Do they need to have revenue for this option of 0%? Like, I think I've seen some people without even having revenue get access to that 0%. How does that?
They can, but for the most part, again, the people that get the best results are people that have, I'm going to bring this up because I see this a lot. Like we have clients that, I've been doing this for close to 5 years, and I can look at a credit profile and look and see this profile looks synthetic. This guy looks like he's just tried way too hard to like create something here. And a lot of people try to do the same thing on the business side, and it's just so clear, right? So a lot of the times, it's not to say that you don't need revenue, documentation, tax returns, or nothing to get approved for business credit. But again, some of these people are just trying too hard to do what they're learning out there, and it's actually getting in the way because you're actually sending different signals to the algorithm. And it doesn't look good, and it doesn't lead to good approvals. So
what would you need?
That question.
No, you did, but let's go a little bit further on that. What do you need from a client to succeed? What do they need to come to you with to make that a successful engagement?
Yeah, so the best clients are, again, generally, and to answer that question, with lines of credit, generally for bank term financing, we want at least 2 years in business, and we're going to want some documentation, at least some last 3 months bank statements, and typically 2-year tax returns.
Okay.
At the 1-year maturity mark, we can get revenue-based lines of credit from fintechs. It's not going to be the best rates, nowhere near bank term financing, because we can get as best as prime plus 0%. So that kind of would answer your question. So if everything's looking good, we can sometimes get away with business lines of credit without having revenue. But generally, the people that are going to get the best results, the best stack out there, are people that have built a profile organically over time, right? Like it's not something they've tried to like synthetically put together.
Right.
And their business, same thing, is established and is organically, legitimately getting deposits in weekly, daily, whatever that looks like. Because everything boils down to like behaviors. That's really all this algorithm, this FICO scoring model really is. So those are the people that get the best results because again, they've got an established business. A lot of the times they might not even know it, but they're already set up with vendors. Some might be reporting to the business credit reports. Some might not be. And there's a very simple, cheap $25 a month service that will get those vendors to start reporting on their business credit report. So it's like picking up a diamond in the dirt and polishing it off, giving it a very strategic plan.
And you're mentioning vendors, but that sounds like a certain type of industry that you're seeing a lot of your clients come from. Which industries do you think have the easiest time getting through your process versus the ones that don't?
To be honest with you, I mean, there are some higher risk industries out there, but half of our clientele is real estate investors, which is also kind of a high risk. Those are where we see some of our most awesomest wins, like our best wins, right? In the client wins Discord channel. So like I said, it boils down more to the behaviors, and the more organic it looks, the less you've tried to do before you come to us in terms of even just repairing your credit or trying to optimize or build your credit. Again, most people just really fall short when it comes to getting prepared for funding.
So for somebody who is still somewhat on the fence with stacking capital. I know you guys have been around for only like a year and a half, but you've done over 18 million in funding for the clients already. But let's say somebody's still on the fence with your program. What would you say to them to help them get over that fence and help them understand that this is really in their best interest?
What would I say? Well, in short, you're investing into a system. Most people come in, they hit the 800 credit score for the first time in a long time. It's hard to kind of put a blanket statement because a lot of people come in and with different situations. My biggest nightmare is to have somebody come in and end up in a worse situation than they were before they met us. And sadly, that happens a lot with the other funding companies. For us, we're here to see you win. So I tell everybody that first round is really just the beginning of our relationship. Even after the 6-month-long program, we have a year-long program that focuses on doing the same exact thing of getting you 0% funding, expanding your banking footprint. Now we're shifting more our focus into the business building side of things and accessing those long-term financing options from those banks. So in short, I mean, it's going to be the best investment you can make in terms of being capital ready for your business or your investments.
And going into 2026, what is one last piece of advice or something you want to tell the audience before we wrap this up?
Yeah, leverage it. This is probably one of the greatest gifts we have as an American here is to be able to leverage and use credit. Other countries don't have this, right? And in a time where everybody is using leverage, everybody's moving fast, everybody's using AI to do more faster. It's the same thing with leverage. If you got people out there using AI and using credit as leverage, and you're still operating with no AI and no leverage, then you're going to be left in the dust.
Yeah, we're telling a lot of our clients right now with the way interest rates are heading, it is time to get credit. It's time to get funding. It's time to move fast.
How can you compete with that?
You can't compete. You're like a whole team with that kind of capital.
And speaking of that too, I've been doing this close to 5 years, but yes, back in September of 2024, Stacking Capital was rebranded to reflect this whole team and not just myself.
Wow. Well, I mean, it's a pleasure to see how far you guys have come and where you guys are going. And I mean, we're going to keep sending people your way because this is probably the best thing I've seen on the market so far. And it's probably going to stay like that for at least the next 100 years or so. We'll see how it goes.
But, there's big plans coming.
Big plans. But yeah, you guys are the best at this. So it's a pleasure.
Thank you, David. Thank you for having me.